Good morning, Pacific Standard Time, 11:19 a.m. Pacific Standard Time, 4/6 of 2013. Updating our worldwide trader network. The Dow Jones daily chart using the MMT platform. One of the things that I'm going to bring to people's attention is that the jobs report that everyone knows about, we already forecasted it. The trader network worldwide, they bought the dip. They got back above the 20-day moving average and the 10-day simple moving average. This is where we made the highs. This is where the highs were made. Let's see where the highs were. Let's bring this down so you can see it. The highs were here. This was done on 4/3. The Dow hit 14,683 all-time highs in this bull run. But let me tell everyone what happened. The low on Friday on that jobs report hit 14,522. That means that the intraday dollar price on the Dow had 157.77 points. So that the intraday range here was the complete total volatility, VO1 column here, MMTs, was exactly 157 points. What I would like to tell people in the Dow that we're going into a major catalyst in earnings reports. I've already gone over the earnings that start on Monday with Alcoa. The following week, you'll have the Googles, you'll have the Goldman Sachs, the JP Morgan, so forth and so on. They came in and they bought the dip. The unemployment number hit our labor force. Listen, they were looking for 268,000 jobs. They only had 88,000 that came in. Everyone already knows that because I've updated everyone on Friday. They came in and bought the dip. That's what bulls do. People they're buying the all-time high on the dips, where there's going to be increased volatility on the Dow. The Dow remains overbought. You're going into a lower growth environment with the earnings starting Monday. Over the next month, there's going to be a lot more volatility. Seasonality is going to play a factor because the old myth is buy in November and go away in May. Hey, the public owns that kind of thinking. And MMT, well, we make markets to the upside and to the downside. I'm going to give an all-time alert to the public. Be aware that we've had one big, great bull run. The quarterly earnings, there's 30 stocks in the Dow. Only 30. And they're going to be reporting. I already did the S&P 500. We will be buyers on certain individual equities that would provide an opportunity. The sentiment is still very strong for the bull. However, the economic data that we got this last week and various different economic indicators did not show up to the plate because they didn't. January, February, and March, we had some pretty good economic data, but then this economic data has starting to fall, meaning that we hit a top with those indicators, the housing market, the automobile market. People have been buying in that area, the financials. You need the financials, you need the housing market to make a bull run. And over the last several years, they have lagged. But I will tell you that we think the Dow is ahead of itself. And we think that people, like in any market or any bull run, they get ahead of themselves. And the thing about it is, there's a tremendous amount of money on the sideline. The key factor is what's going to happen during these quarterly earnings and where this Dow. We're going to be watching for support on the Dow at 14,000. It'll be right here in this candle. It'll be this half bar, 14,207. That is the half daily bar where once we cleared this resistance level, you can see how the diamonds were ascending. We made all-time highs. We came back mathematically, and let me tell everybody one thing. Each one of these lines right here in our system is 43.26. 43 points plus 26 pennies, 43.26. That's what they are mathematically, and you can see how accurate they are. When the Dow didn't want to break it, every time we came down, We tested it, we consolidated it on a daily level, and we busted higher, and we have a correction. What I'm going to tell my traders is that we got more downside that's coming in these markets. Meaning that on a weekly and monthly level, even though that we pulled back off of these short-term intraday highs, we're still overbought. The bull is very much intact. But we do know that the broader consensus of the bull in the very short term, the broader part of the crowd is usually wrong. They always have been. Always. That's their behavior, not you, trader, MMT trader. No. Here, we're going to buy the dips. We're going to sell the rips. We're going to pick off good stocks. Fundamentally, in this quarter, when the Dow 30 reports its earnings, we'll pick out the leadership and we'll trade those, whether it's long and short. One of the things that we will tell people is to watch the diamonds and some of the other indexes that are related to the Dow. And what I'm saying is, I believe that the Dow is ahead of itself. You never fight the tape. I can tell you that irrational exuberance or complacency or the lack of fear has a consequence. And that the price volatility, the price movement in all indexes and the individual equities themselves is that you're going to see a much higher price volatility over the next month than you've seen all of the whole calendar year up until now. Which will make great markets for us, MMTs, is because we live for the volatility. Volatility to the downside, we make money, and volatility to the upside. So the broader range of volatility makes us a lot more money. Now, for the general public, they don't know how to deal with it. They never have. It's very hard for an individual to even understand the mechanics of the volatility. And it creates, we'll be looking at fear indicators related to the Dow as well. So beware, they bought the dip. If we close below the red line, that's the 20-day simple moving average at 13,998. This is where the Dow, they came right in, like I said on Friday when we had the big gap down in the markets. I said they would come in pre-market. I said we will buy the dip right away and we will sell it. Because that's what the bull's been doing all year until you start to close below 14,440, where this major daily support line is. Once we come down there and get a closing price below there, we can see where the Dow will come back into play, where the breakout started right over here where I have my cursor. This is where we started on 2 daily up days. We consolidated it to make the high of the year with a pullback and another high of the calendar year. Seasonality is going to be a major factor. For the people that held their IRAs over the last period of time, just remember, there's always the right thing to do. Take some money off the table. Most people do not know when to sell. I'm giving you a warning. It will come clear to you at a later date. And the reason why we're giving the warning now is because we want you to be fully aware of what's going to happen during the quarterly earnings session starting this coming Monday and what the Dow 30 components will be. You will be pulling back, and it would be healthy to come all the way back down here to where the breakout happened on 3/1, March 1st. And that low was 13,937. That's going to be the lower end of the support level. Of course, you're going to have support here. It's when you break these major daily support levels where I'm at right here. They bought that dip, got it right back above there. That money came right in and bought the market, and they discounted what? They always discount the bad news. So they take the bad news and try to make something good out of it. Of course, a bull is a bull. Bull is never going to want to admit that the fundamentals and the economic data is getting worse. No, why would they? They're long the market. That's the last thing they're going to tell you in the media. They're going to tell you what benefits them. And you got to learn how to separate that if you're going to be involved in the markets. GetWithStockMarketFunding.com. This is the Dow Jones. It's a daily update. Closing below the 20-day simple moving average is where you're going to see more downward selling. And over the next 30 to 45 days, price volatility is going to increase. There will be a major bull and bear fight at every single level. One thing I can tell you, though, is you got to know when to sell. You got to know when to take money, when you need to sell. This is the update for the Worldwide Trader Network and the U.S. network of traders that we have. And just be aware that every bull top does have a pullback. And at some point in here, I'm going to bring this up a little bit more, a little bit bigger for you, is this lower area right here at slightly, let's see where this is, 14,325. So 14, this bar right here. 14,286 will be another support level. What I will tell the MMTs is that as the Dow comes down, 14,390 is one full delta down. That's another 171 points to the downside here, folks, mathematically. And this is done before the fact. This math will not lie. Everything we do is algorithmic. Algorithmic, does not have an opinion. It doesn't speculate. The math will tell the truth, and that is where the trade management and the training comes in with SMF. This is why we provide you trading capital. So we went straight up to all-time highs in the positive delta range up here, and now we're working our way back down. And the minute that we hit in the negative delta ranges, and each one of these are 43.26 per line. They don't lie. And they're called 1/2 delta equals 43.26. Be aware, Dow Jones, major earnings coming. We've given the public a warning. Not everything is just going to go straight down. Some companies will fare okay, but here's the problem. They're already at multi-year highs. So all the good news is priced into a lot of these names. This is where sell the news, buy the rumor, sell the news comes into play. You've been warned.